Good morning, everyone, and welcome to another webinar in the CMAST East Africa webinar series. Today we have a 60-minute panel discussion entitled Building Loyalty and Engagement Through Transaction Banking. We're lucky to be joined by 4 industry experts on the panel who've kindly agreed to share their expert insight. And our panelists today, we have Judith Mkama, who is the Head of Institutional Banking at Commercial Bank of Africa. Michael Mungure, please correct my pronunciation, who is the Head of Transactional Banking at NMB Bank. Paul Sesai, who is the Head of Transactional Banking at SBM Bank. And moderating the session for us today, we have Ali Hussain, who is the co-founder and CEO of Kapochi. In a moment, I'd like to hand over to Ali so that we can get started. Before I do that, can I just ask all of our panelists to turn on their webcams and microphones? And whilst everyone does that, please can I remind all webinar attendees that you can ask questions throughout the panel session and our panelists will do their best to answer them. So without further ado, Ali, over to you.
Thank you, Julia. Good morning, everybody. Interesting conversation today. Julia has already introduced our panelists, so I want to maybe quickly start by having a brief conversation on exactly what transactional banking is. So, from a description perspective, transaction banking basically can be defined as a set of instruments and services that a bank offers to trading partners to financially support their reciprocal exchange of goods, basically trade, monetary flows, cash or commercial papers exchanges. Now, there's been a lot of conversation about the need to create and grow products within this section of banking. But even as we do that, the evaluation of alternative channels, and I sort of say this tongue-in-cheek when I talk about alternative channels, because we have seen that in the recent past, alternative channels, the so-called alternative channels, mobile, internet, have actually become the channels. So if you look at some examples of banks in East Africa, you will find that some banks, 97% of their transactions have now moved to mobile. The question and the conversation around today I'm going to be posing to my panelists is, why is it that the so-called transactional banking or corporate banking hasn't moved lock in step with personal banking? What are the issues that we are facing today that is holding the quick and fast transition to not alternative channels, as we call them, but the channel, that's digital and mobile? So without further ado, I'm going to ask Judith to sort of do a brief introduction about herself and sort of delve into the conversation that I have already started. Then I'll go to Paul, then I'll go to Michael, and we'll start having a conversation and discussion around that, and then I'll open up the conversation and questions to our viewers. Judith, over to you.
Thank you very much. My name is Judith Mkama. I'm the Head of Institutional Banking for Commercial Bank of Africa for Tanzania. Soon will be NCBA Bank Tanzania, as we're going through a merger. I think the topic has come to a great time to note that, noting the changes that we're currently working on, as a business, as businesses and individuals, we've had to change the way we go around our business with the current situation. I think it's impeccable that we have to use smart aggregation to develop standard banking experience that meet and exceed our digital consumers' expectation. But at the same time, also, as banks, rightly how you put it is, there's been a slow linkage between retail banking and corporate banking offering. So it's good if we can look at that and see how both the products can come together to serve the digital consumer.
Thanks, Judith. I'm not sure if if Ali's connection might have just dropped a little there. But whilst, oh, he's back, sorry.
Sorry, I'm back. Judith, thank you so much for that. Paul, over to you. Quick intro about yourself and a bit of conversation around what your thoughts are as far as transactional banking.
Yeah, good morning, everyone. My name is Paul Sesi, the head of transactional banking at SBM Bank in Kenya, and I'll delve right into your topic and into the introduction that you've just given us. And it is true, even here in Kenya, the development of transactional banking in the consumer or in the retail space has been very different from an uptick perspective into corporate, and we see various reasons for that. Number one, individuals are early adopters and they're able to take it up quickly. The decision-making process in corporates is different, but even with that, there's a risk aspect on the corporate space based on individual transaction values and volumes. So there's always a little bit of caution, and then the decision-making process in the corporate space takes a little bit longer to adapt to some of these changes. So over and above that, I mean, the corporate mandate or the corporate signing mandate on accounts in banks is a bit complicated. It's not a one-man decision. So we've got various levels. Others have got transactional limits, etc. And based on that, it takes a while, and it's a bit expensive to build those into the digital channels. I mean, we can delve into it a little bit more, but from an introductory perspective, those are the challenges that we've experienced in this part of the world. Yeah, over to you.
Paul, I'll come back to you on that. I have several challenges for bankers on how to actually resolve some of these issues. So you have raised issues to do with security, you have raised issues to do with the customer journey, which is different in regards to personal banking as opposed to corporate banking. So hold that thought, Paul. I'm about to throw you a curveball, and we can have a nice discussion around that. But without further conversation, let me invite Michael to give his initial opening statement and what he thinks as far as in relation to his operations at NMB Tanzania. Michael, over to you, brother.
Thank you, Ali. My name is Michael Mungure, and I am currently the head of transaction banking at NMB in Tanzania. Been in the banking, this is my 20th year, and of that about 14, 15 years in transaction banking. So, I've seen quite a bit of changes over the past few years regards to corporates taking up new ways of banking. But I think if you're comparing a corporate customer to an individual customer is not a fair comparison, because the decision-making process, as Paul has alluded to, is different. But also, the types of transactions that are done by a corporates, tend to be higher in value and also in volume. So the risk is much higher if something goes wrong. And this is always in the minds of decision makers for these corporates. But having said that, over the last, I would say 10 years, there has been a tremendous growth in terms of uptake of alternative channels within the corporates themselves. Thank you.
So Michael and Paul, interesting conversations around the customer journey and how it's different dealing with with personal banking as opposed to corporate banking. And to a large extent, I would agree with you, because corporates require sort of different instruments as opposed to individuals. Let me pose a question to you guys. So when it comes to personal banking, what you have is a situation where we seem not to appreciate, as professionals in the financial services sector, that the same people that we are dealing with at the corporate level are the same people that we are dealing with at the individual level. So if you have a CFO who's dealing with commercial paper, who's dealing with invoice factoring and all these other, newfangled instruments that are making banking super interesting, it's the same individual that has a personal bank account. So the point that I'm trying to make is, why are we differentiating this? And the issues of security, I've had this conversation a lot with my colleagues in the financial services sector, is that security should not be an excuse, and forgive my bad language here, but I'm going to say it anyway, not used for bad customer service, for bad customer journeys. I'm an individual. I have my own personal bank accounts. I also own corporates, and I can tell you, man, it's sometimes dealing with corporate digital platforms. It's less painful going to a dentist. How can we ensure? How can we ensure that we bridge that gap? How do we get to a point where bankers are more open-minded to partner with fintechs to allow them to ease this customer journey? And Paul, over to you on this, and then maybe I will allow my sister Judith to also jump in, because Judith works for a group that I would say is actually on the cutting edge or bleeding edge when it comes to financial technology. And yet I'm not seeing that translating into corporate banking perspective. So I'm putting you guys on the carpet. Over to you, Paul.
Oh, I think you're on mute there, Paul.
Paul,
Yeah,
sorry, you're on mute. Unmute.
Sorry about that. I think you are right when you say it is the same person who is the CFO of a big corporate who has got his own personal account on mobile banking, and then he is also responsible for a big corporate. So you're saying he's adapted transactional solutions or digital solutions on his personal account, but then it's difficult for him to, yeah. So I know you're asking, so what's the issue? But then, so it boils down to one, when this, so he's adapted to it. So if we just go to the technology itself, the technology, first of all, is generally built for the individual transaction. For the consumer, for the retail bank, for the retail customer. Okay. Then you find that we want to scale that solution up as it is to the corporate customer, which always doesn't work. We don't go back and, so we say it worked for the retail customer, and then we assume it will work for the corporate customer without looking at the, like you said rightfully, the customer journey map, which is very different from the corporate. Then secondly, there are certain more complicated products and services that the corporate customer consumes that are, let me not say difficult to build into the digital channel, but a bit complicated. Look at a letter of credit. Look at a derivative product like an option, like an interest rate swap, where before you commit to a transaction, there is heavy documentation, number one. Number two, there is a negotiation process. You had a conversation with the treasurer, and you don't build that up into, or rather, we've not seen it being built up very well. So when it comes to the vanilla payments, you paid suppliers or you're paying salaries, that uptake is good. But there are some certain products and services, letters of credit, like I've just said, foreign exchange, forwards, swaps, that have not yet been built very well. We know there are efforts to do it, but it's not gotten to that part. Back to the risk conversation that you had. One transaction for corporate goes into millions of dollars. So it's not that we're saying that the digital channels are not secure. We're looking at the risk aspect by just getting one transaction going wrong or one transaction getting hacked. So am I saying that it's impossible to build? No, I am saying a lot more work and a lot more thinking needs to be put in. At this point, let me give other colleagues a chance to probably weigh in on that. But in the initial, that's the...
Paul, thank you very much. I think you make a lot of sense when it comes to that. Judith, would you like to weigh in on this?
Yeah, thank you, Ali. I think at the far first, it has to be with each bank has a different segment or business customer profile that they would like to target, hence making it a pretty split decision on what you can do for both retail and corporate, or just your business, you just wanted to focus on, say, corporate rather than retail. However, when we look at majority of the commercial banks who are in both, are trading in both space, what I can say is that not all products would want to be in a solution whereby all transactional banking products can also accommodate retail clientele. However, not all solutions can cut through. But we've seen that some solutions are able to penetrate through both portfolios and has worked well for the businesses. For example, their banks, mid-size banks have also moved into, say, offering corporate credit cards and debit cards. This was a need solutions when it comes to the corporate clients because they travel a lot and everything. But when you look at it, the product in itself, it's classified as a retail product. So there was a need to accommodate the business operations of it. Then you look at the offering, say, for example, POS machines. When we're offering the corporate, while the product in itself sits under retail banking. So that's another angle for collections of money, which has helped on transaction volumes for transactional banking. But at the same point, I'd want to also touch on, like what Ali has said, for example, in our case, we've gone to partner up with mobile companies and created a product tool that can cater to both retail and micro businesses, the pure SME clientele, which on our case we've seen huge, a very high return on that investment, because unlike putting them in a bank, somehow we find them more respondent being in the mobile, and the default ratio is very low. While if you put them in a banking system based on the requirements and the regulations, you'd find also the rate of default is very high. So generally what I would say is I do agree that most products need to be tallied to cater to both retail and corporate and get the best of both worlds. but at the same time, it will highly depend on the segmentation of the respective business. Thank you, Ali.
Thank you, Judith. Michael, would you like to add your perspective to this interesting conversation?
Yeah, I'm with you on that. No product of the bank should be as painful as going to a dentist, or even more so. So it is our duty to make the experience a pleasant one. It doesn't matter whether you're in corporate or retail or any segment of the bank. The experience has to be top notch. When it comes to transaction banking products, the transaction banking customer is looking for simple things. Is looking for low cost. Is looking for timely transaction, quick transactions that do not take forever to materialize. They are looking for absolutely zero errors. They are looking for good recon process. These are things that when you're talking about transaction banking, our customers are generally looking for, unless you're talking about complex products. Transaction banking by nature shouldn't be complex. Therefore, we don't have an excuse to make it a painful process for a customer to be dealing with the banks. So I'm with you on that. It is a journey. In my experience, we started with plain vanilla products back in 2003, 2006 there, when we really started rolling out internet banking products for the customers who were willing to take the leap into alternative products. So, I think my message there is yes, it is different. It is different from retail, but no excuse for it to be painful. Thank you.
Michael, thank you so much. I would like to sort of talk about a famous Swahili saying, and I can translate that into English for our English speakers. But most of us are from East Africa, so we can potentially understand. And for the rest who may not understand, I will translate. So the old Kiswahili saying that goes, haba na haba hujaza kibaba, which basically means when you start sort of putting small little transactions together, they actually end up being one huge transaction. And that is sort of really being laid out when it comes to digital and mobile technologies. So if we look at my home country in Kenya today, you are talking about humongous amounts of money being transacted on mobile. I think, if I'm not wrong, mobile transactions in Kenya today are about to hit 1 trillion shillings per month. So you can imagine the complications and the complicated technology that has made this simple and easy to use. My analogy would be, if you're using Microsoft products like MS Word, Excel, and stuff like that, the simplicity of those products are amazing. Almost to the extent that a 6-7-year-old can jump into it and start. But the back-end technology that has built that simplicity is amazing and continues to amaze us. When it comes to banking, I think you all will agree with me, there's a huge gap in funding for SMEs. And I'll go maybe one step further and say MSMEs across Africa. A World Bank report in 2018 talks about a funding gap of $86 billion. Now, what are your thoughts about traditional banking not looking at this opportunity and actually starting to bridge this gap. And I'll tell you, I'll give you a personal experience. Running a small micro enterprise with maybe 6-7 employees who are paid on a monthly basis, my bank would rather give loans of up to £1 million shillings to my employees as opposed to giving a loan or a bridging finance to the organization that pays these employees. You know, as my teenage son would say, what's up with that? So can the concept of transactional banking be translated to deal with SME banking? What are your thoughts about that? And I'll ask Paul to jump in and give us his thoughts as far as that is concerned.
Thanks, Ali, for that question. And you touch on the core nerve of this. So transactional banking, in my view, gives a lot of visibility on the health of a business, on the capability of the business. It gives you a window into what is going on into a business. Now, yes, I will agree with you that there are some issues that traditional banking needs to be fixed. But I believe the biggest problem when you have such a scenario as you have described is when a certain SME or a certain company is multi-banked, and therefore the transactions are split between various institutions and no one has a proper visibility on what is happening to the company. So transactional banking then at that point becomes a handicap, okay? But if you're transacting and having all your transactional volumes given visibility in one institution, it becomes very easy to understand that institution over and above just providing static financial reports. Because remember, financial reports are historical. Even if it is as at yesterday, it is historical. Transactional banking gives you the window into the current pulse of that institution. So I would urge, and I tell my customers this every time, it doesn't have to be with me as a banker, but the minute a banker has your transactional history with them and they can see it clearly, then such issues as you describe right now, you know, I can lend to your employees, but I can't lend to you, is because I can see your employees with their entire accounts are with me. I have their history. I see when they are paying for their utilities. I have visibility of all that. I have more information.
Paul, can I interrupt you on that?
Yes, please.
I think you've raised a very important point. You have visibility on my employees. What stops you from having visibility with the entity that employs these employees? What stops you from having that visibility? What stops any bank?
Perfect. What stops me is that you want to be multi-banked. You want to have you want to split your transactions between various institutions for whatever reasons. Institutions have various motivations for that. But for as long as then you hide that visibility from me, it becomes very difficult for me to make a decision.
Paul, number one, the same can be said of the individual. Most individuals are multi-banked, number one. But number two, there is potentially an easy answer to that from a multi-bank perspective when it comes to corporates. And I think this requires out-of-the-box thinking. Actually, scratch that. It requires no-box thinking. And I'm talking here of the potential of open banking. If banks are potentially some of the most wired and lobby savvy organizations worldwide. So if bankers actually want an ethos of open banking, they can make it happen very quickly. What is stopping that? And I want you to hold that thought as I ask Judith to add on to this conversation. But I'll come back to you on that. The ethos of open banking and how that can help the monster of hiding transactions and multi-banking. Judith, over to you.
Thank you, Ali. Now, I think it's a very interesting conversation when you say, initially you say that funding gap to fund the SMEs. When you look at it traditionally, most people look at small businesses as a much more riskier and tricky businesses because it's not very clear of what, the business mechanism can change anytime. But that said, what I have appreciated so far, when you look at the traditional banking or transaction banking that we're doing before and looking at it now, we're seeing a lot of corporations willing to do basic fundings and partner with banks and deploy via mobile when it comes to loans for SMEs. For example, in our case, we had, a few years ago, we had funding from Bill and Melinda Gates Foundation. That's specified in that kind of arrangement whereby you're funding a specific business segment and cater to them and their operations. But at the same time also, we've seen Africa Development Bank also come in. There's a funding for Africa just to deal with, I believe it's startup and innovation for SMEs across the Africa region. Now, when you take it now back to banking, what you're seeing is also which I agree also with Paul, is visibility of what exactly is happening to manage those transactions. We are highly regulated as institutions. So it becomes a very thin line of matters of what you can do to deliver to accommodate certain transactions. For example, for CBAs, Mshwari and Empower, the customer ownership sits with the mobile. So currently they are doing the KYC, the full KYC of the client, while we're doing the MIS of the business. But say, for example, if we take all those millions and thousands of clients and put them in the bank, high chance most of them won't be able to meet the bank criteria. That's another problem, but you still want to cater for them. Then you're seeing also another issue also is reconciliation and documentation. Whenever there is a funding, there is requirements, security and all that. How conversant are the SMEs in our industry or in our markets, the level of understanding of the businesses that they're trading? And for example, for Tanzania, we have the Tanzanian private sector, which I think has about 5,000 members of SMEs that receive funding and or enter dialogues with banks and institutions. But when you look at it now in a flow, it doesn't tally with the regulations of what we are authorized to do as a bank. What are the limits that we're authorized to do with the central banks? But at the same time also, the only way you can cater to them is now partner directly maybe with another aggregator or think tank to come up with a solution, but also funding, find somebody who's going to fund that product that you'll be laying out. Thank you, Ali.
Judy, thank you so much. You've raised several very great points, several valid points, which sort of bellies my point about partnerships and all that. We will come back to that. Michael, any comments from your side on this particular issue?
Yes, thank you, Ali. I think my colleagues there have touched on the most important aspect. I'm no expert in credit, but I'll tell you, in your case, what your banker is looking at is of course your cash flows, And by regulation, I know we've spoken about regulation, they need to have to see some sort of security. And you find in most SMEs, they will have cash flow, but not strong collaterals for supporting large loans from banks. But for those that do have collaterals, you find sketchy information on cash flows. And I think this is where people like yourselves can step.
Have we lost Michael there?
Yes, I think his
Julia, have we lost Michael?
Yeah, I think his connection might have dropped.
Oh, all right. We'll get back to him. But before I come back to Paul, I think there's an interesting question from one of our viewers. Let me go for it. John Kawesi is asking, why is it hard for most banks and fintechs to build for single sign-on digital platform, one entry for both retail and corporate users? If we are to focus on the customer, we may need to always remind ourselves of the architecture we chose. I mean, this guy has just removed the words from my mouth, you know, and this is something that Paul and I had started discussing. You know, forgive me for saying this, but it's almost like when we are making products for corporate, we are making products for robots. But when we are making products for personal banking, we are making products for human beings. How do we bridge that gap? How do we make, how is it possible, at what point through the customer or product journey are we going to realize that we are dealing with human beings, whether it's corporate or private? Paul, I promised you I'm throwing you a curveball. There it is.
Yes, and thanks for that. Look, you see, we are assuming that the development of the digital world of banking or the transactional world of banking happened on a big bang. That's not true. It was incremental innovation. And you will understand that with incremental innovation, you start from unknown to unknown. So and the known in this instance was the retail banking. So that was your known, and it started. And remember, it didn't go from top, top level of what do you call it, innovation. It started in bits and pieces. It started with mobile money and then moved on to, mobile banking. So we should not assume that we are not going to go through a developmental path where incremental innovation is going to be applied. I'm not saying there's no room for novel innovation. There is room for novel innovation in banking. But as far as the digital landscape is concerned, it has been a slow build. And if it's been a slow build, you're not going to see overnight an entire unified ecosystem that covers both retail and corporate. That's my short answer, Ali. I don't know what others think about it.
So Paul, in Kenya, we have been with mobile banking now since mainstream. That when we have, would you agree with me? We are probably in our at least 10th year.
Yes. Yeah.
Would you?
Sorry, Ali, I'm losing you there.
Paul, are you with me?
Sorry, I lost you a bit.
So,
yeah.
Can you hear me?
Yeah, now much better.
I'm saying when it comes to mobility and mobile banking, would you agree with me we're like in our 10th year?
Yeah, 10 plus, yes.
So, guys, after 10 years of mobile banking, are we still waiting? where are we at from a product development perspective?
So
how much longer are we going to wait, Paul?
Okay, so this is what I would say. Look, the development path started with mobile money, and then we went into mobile banking. And the minute we got into mobile banking, we did not spread the tentacles into other segments. We started to deepen mobile banking. So you're able to pay your utilities, you're able to pay suppliers, you're able to pay multiple channels. We deepened what you could do within mobile banking, okay? So I believe that the next frontier that we're getting into is now to spread the tentacles into what you can now do with SMEs, with what you can do with corporates. So that's my view. It just didn't stop at mobile banking. It was still on the retail space, but being deepened because they had gotten it right. There was appetite. There was a business case for it. Yeah.
Paul, thank you so much for that. I think as far as that is concerned, we're on the same page with you. Michael, we sort of cut you short of connectivity was a bit of a problem. Would you like to continue where you stopped and probably delve into this unified login conversation that we are having? Over to you, Michael.
Yes, I don't know what.
Michael, before you start, I think maybe a little bit of housekeeping. If you're not speaking, maybe mute your mic because there's a bit of an echo going on.
Yes, thank you, Ali. I was talking about earlier trying to link what fintechs can do to improve the situation that you had demonstrated, where banks are willing to lend to your employees rather than to lend to your company. So, and I arrived at the issue of data on cash flow and the activities of SME where we feel, there are solutions that we can put out there in partnership with fintechs that can allow us to get data, clean, crisp, granular data on activities of SME, and thereby derive capability to understand creditworthiness of these SMEs. So I think it's a homework for both our segments in the industry, both banks and the fintech world that is coming up. As to the question on unified logging, it's not really rocket science for me. I think it's something that can be done. You are a business owner, log into your personal accounts in a bank, and if you decide you want to check what has happened within your company's books, accounts within the same bank, why should you log out and log in again as a CFO or CEO? So it's something that can be done pretty easily. Technologists on the panel will tell you it's not rocket science for me, and I think it's something we should all do.
Michael, thank you so much. I have a question before we go back into. I have a question from a panelist. Sorry, from an audience. Navid Khan. Question: AI and machine learning are buzzwords most typically associated with retail banking and delivering their super personalized real-time user experience. When it comes to corporate banking, does AI and ML still hold as much potential? If so, is the focus on developing a great UX or something else? Judith, this is over to you. Our audiences are almost like reading my mind because that was gonna be my next question. Judith, I think when you're answering, probably link this to your experience as a bank with the success of Mshwari, the success of your partnership with Safaricom regarding Fuliza and the rest of it. When are we gonna see these humongous innovations translated into corporate banking? Over to you, Judith.
Okay, thank you, Ali. I think we're already there. It's just a matter of deployment. Why I'm saying that is, if you look at to when, for example, on the part for CBA, when the first initiative partnership with Safaricom and Vodacom for Tanzania, and MTN across in Uganda and Rwanda and them. But when you look at the partnership, it's more, we've had such a huge transition in phases, comparison 5 years ago to now. Like advised earlier, like shared earlier, sorry, originally we did not own the customers. The partnership was that the client was sitting with the telecom, but it's just mirrored to our end. So that created a gap of KYCs and all that, okay? Now that we've gone, if you look at it, also when you look at East Africa, at that time when CBA was starting, was rolling out this solution, even the central banks did not have a direct linkage with the telecom regulator on how to manage this business. Now, come to now, you've seen better regulations, clear lineup on how to manage the businesses and offering. And we're now going to the bigger phase of limits also. We're seeing that, Mshwari, Empower, also the COPA we're seeing that we've now increased the limits of offering. Before, it was very basic that focused on basic individuals. But now we're seeing, for example, in Tanzania, the local small businesses can actually go to Empower and get the facilities from there and use the products. But at the same time also for savings, we're also leveraging on that. When you look at it, if a regular small business comes to the bank and wants to save money, the interest rate they'll be offered in the bank is very low, while we're offering a bigger interest rate when you use the mobile platform with a partnership with the telecoms. So in all around, in our offices, what we've done is we take back feedbacks from all the regions that we offer the solutions, but at the same time, every 3 months, depending on every 3 months or so, depending on the environment, we do review the limits to accommodate clients who are not clients who banks have qualified as non-bankable customers. So we try very hard to accommodate their needs through those platforms. Now, can we link, say, the Mshwari, for example, product to the corporate business? The first initiative would have first to be with the regulator, who is pretty much number one on this transactions or arrangement rather. The permits would have to allow to keep the linkage of such offerings into the banking platforms.
So, Judith, what you're telling me is that the banks are ready to launch all these brilliant innovations that have already been rolled out to individuals, but we are yet to see some of these innovations in transactional banking. I mean, this is like me walking into a restaurant. I can smell the biryani, but I cannot order it. What's up with that? What's up with that? Michael, would you like to help me understand this holding back as far as transactional banking?
Yes, thank you, Ali. The biryani is ready. It just needs to be served, and how we serve it is is going to be dependent on the partnership we banks are willing to open up. You touched upon open banking. You know, fintechs stepping up, you know, to work with us. You know, banks, you know, from legacy systems, etc., it's becoming very, very expensive to innovate on their own. We need to be working with these partnerships. You know, also thank you, Naveed, for the question. You know, AI, machine learning, those are needed just as much on the corporate side, perhaps even more so than you would see in the retail space. And as to the question whether it's for user experience or something else, I think it's both. And I'm looking at the user being a corporate, because if you use AI to make it easier for a customer to see the information that they want, to use AI, machine learning to do better forecasting, for example, you're going to have to present it to a user. So if you have a good AI working in the back end, then you have a great user experience, and customers will want to use your system. So to answer your question, I think it's for both. So Ali, you know, biryani is ready, and it's for us to really serve it.
Michael, you know, you talk about a corporate like this, no human being behind that. You know, I'll give you talked about it quite a bit. Let me go back to some of the customer journey conversations that we had. And one of the things that still gets me up to today is the onboarding of new customers, whether it's private or transactional banking. This is something that is a serious issue that banks need to. In a new bank account, whether it's corporate or individual, I have to be asked for the same KYC or KYB documents. KYB, know your business. KYC, of course, know your customer. Where are we at in this product development process, where banks are able to say, great, we have all your documents. You want to open a new bank account? We know you. We know you as a corporate. We know you as an individual. It's plug and play, you know? And please don't tell me about regulation. You know, I think we are past that conversation around regulation and saying that every time I must give you the documents you had yesterday. Why can we not, in the financial services sector, partner with tech, like a company that I work with called Zinsec, that mitigates these legacy systems, that on the fly gives you a solution that you can just call upon. You want to check my status in the company registry? Click. You want to check my status as regards to AML, that's anti-money laundering, or as regards to my status as a PEP, that's politically exposed persons. Everything is automated. Are we aware in the financial services sector that we have partners who can do this and who are already doing it on a global scale? What is holding us back? Providing this seamless, delightful customer journey. Paul, over to you. I love to give Paul curveballs. Maybe because we're in the same city.
Yeah. So I'll jump in right there. So you ask, why can't I get the registry, updates real time? So my question would be, I think the banks are ready, but is the registry automated? Is the company registry automated? Is the land registry automated? Remember, the registration of persons has been automated through I think it's called IPRS. Banks have already gotten that integration, and we're able to check your ID number.
Correct.
On a real time. Safaricom has brought in one for checking SIM cards, and whether a SIM is swapped or what the status is of a SIM. And the banks have been very quick to adapt that. So I don't think the problem is really much in banking. And I'm not defending my industry. What I'm saying is that there are other technologies that have got to develop commensurate to banking. Because remember, KYC or KYB is a living process. Know your customer is not static. It's living. So you've got to be in tabs. You've got to be keeping pace with your customer. I think banks are open to it. I think it is the ecosystem that hasn't gotten there yet. But banks, if not any other person, banks would be the most interested persons to have the most updated details about their customers. If you would update your signature every so often, because the signature, how you signed 10 years ago and how you sign now, there's a bit of a difference. If we're able to get that on a real-time basis, believe you me, banks would be the first to adapt to it. And I agree with you, it has nothing to do with regulation.
Paul, thank you so much. I'll take you up on that conversation after our webinar is done. I know we've run out of time, so before I close, I would like to ask Judith to give her closing remarks. Judith, please keep it under 1 minute, and then we go to Michael, and we go to Paul, and I'll close it and hand over to Julia, our host.
Thank you, Ali. I think we've had a very good conversation and touched on most things and gave each other also ideas that we can use in all our respective business industries and companies on how to deploy new ideas and also perfect what we already have and what we can do more. I believe also as customers, based on what we've said, you've had a more open-minded experience on what ideas that we're looking at. Also, if you have businesses that are registered that can partner with banks, we're always happy to hear more of what the think tanks are thinking, or the digital world is looking at innovation. On my case, I'm in a very innovative bank that is open to new ideas. So it'll be we can stay in touch. It'll be very interested to hear what we can do, or what solutions can be deployed for the East African region to enable a better and more efficient experience for digital banking solutions.
Judy, thank you so much. Michael, over to you.
Thank you, Ali. We've had a good conversation. Some of the questions you were throwing out are spot on. There are challenges that our customers shouldn't be experiencing right now. If you're a company owner today, we have all your KYC, but if you decide to open a savings account, guess what? We will have to ask you for documents that we probably already have. So it's like the question of unified login. Some of the things are within our own power to really fix, but in order to reach a point where we are, to use your word, giving delightful customer experience, there's need for partnership with the technology world out there, with the fintech. So, you know, we recognize that as an industry. A number of banks have started, you know, thinking about hackathons and things like that that you hear about coming up very soon. So I think the future is looking good with respect to partnership and open banking, working with fintechs. Thank you.
Michael, thank you so much. Paul, over to you, your closing statements.
Yeah, so very briefly, there's a lot of work to be done. There's a lot of room for improvement. Some of these efforts will take strategic alliances between individual banks and the right players, not only in the fintech world. Some of these innovations will take banking industry partnerships with other industries. And most of this will also take government and regulators to come in. So it's a multi-sectoral effort, if you ask me. Thanks.
Paul, thank you so much. And thank you everyone for making the time to join us today on this webinar. Transactional banking and corporate banking is usually not as exciting as personal banking, so we have sort of tried to bring out the issues at hand. So for me, my takeaway is that yes, the financial service sector appreciates that transactional banking requires to sort of up its game when it comes to user experience and stuff like that. And the journey has already started. What I would like to urge the players in the space is that we're getting impatient. We're getting impatient, so let's move the needle. Let's move the needle, guys. Let's move the needle. And with those few words, I would like to hand this over back to Julia Fitz, who is our host for today. Thank you so much for attending this webinar. Over to you, Julia.
Thanks, Ali, and a huge thanks to all of you guys for joining today and sharing your insights. I hope you enjoyed it. So that is the end of the session for today. The webinar will be accessible via our website for on-demand viewing from tomorrow. If you do have any questions, please feel free to get in touch with us via our website, and we hope to see you again soon. We're running Seamless East Africa Virtual in September, so I hope you can all join then. Thanks again, everyone.
Thank you.
Thank you.